Morning, Steve here in Chicago with the morning grain comments. Yesterday we ran into some resistance in the market around the 1039 area in the March beans and 370 in the March corn. I think in the corn we saw some farmers selling pick up, and we expect farmers to sell every nickel higher as the market goes up, which gives us strong resistance. Under the corn market, though, is the fact that South American crops could be smaller. We're seeing a little bit better export trade in the U.S., and U.S. farmers expected to lower acres in 2018. The bean market still trading Argentina weather. Our forecaster suggests that March could see better rains for Argentina. The question is it too little, too late? Also, another question is, if it starts raining down there, does that cause any problems during their harvests or any quality issues? It's still raining too much in northern Brazil. And I think that when we look at the trade, they're expecting the U.S. crush to be maybe 50 million bushels bigger than what the USDA is saying, and meal exports could be a record 13.6 million short tons, and so that keeps a support underneath the market until we know more about the Brazil crop. People are raising the Brazil soybean crop to a record 115 to 116 million tons, and that could slow our export demand in the July-August timeframe and could offset the higher crush. So our carryout may not change that much from 530. So I don't think beans are worth anything over 1050, but we're not ready to go down to 950 just quite yet till we figure out what's going to happen to our meal demand. The wheat market ran into some resistance. It just seems like we can't get over $5 July wheat. That's because there's just too much wheat in the world, and we just need a much bigger weather problem here in the United States to push prices over that level in the wheat. We did see that one analyst just selling 17, 18, and 19 corn about 10 to 15 cents higher in the market, and selling 17 and 18 beans about 20 cents higher in the market. So farmers should have their eyes on managing risk at this particular time with these rallies. You have to keep in the back of your mind, if we have a good crop in 18 here in the United States, prices are going to go lower. We get the USDA outlook for them this week. It's kind of interesting in some of the numbers that they're putting out for 2027. They basically look at world soybean trade up to 205 million metric tons. This year it's 252. It's 152. The China imports at 143 million tons. It's 97. And Brazil exports at 96 versus 69 this year. So you can see the trend is higher being trade, higher exports to China, but Brazil kind of picks up most of that increase. Corn trade at 189 million tons. We're at 154 this year. Brazil going up to 45 million tons of exports. U.S. is around 56 versus 52. So again, Brazil is the one that could gain in that trade. And world wheat trade, 212 million tons versus 182 this year. Combined FSU going up to about 70 million metric tons. And that might be a little light considering that the Russians want to increase their wheat crop 20 million tons over the next 3 years. So on balance, you see world trade and demand going up, but the Black Sea and South America gaining a big percentage of the increase in trade. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.